In 1929, people believed the economy would grow forever. Stocks were rising, money was flowing, confidence was everywhere. Then, almost overnight, everything changed. The Wall Street crash of 1929 wiped out fortunes. Banks collapsed, millions of people lost their jobs. And what followed wasn't just a bad year. It was the Great Depression, a crisis that lasted nearly a decade and affected the entire world. Now imagine something even bigger, not just a financial collapse, but a global war. So what happens to the United States economy after World War III? To understand the future, we need to understand the pattern of the past. Before every major crisis, there is a period of calm, and then confidence turns into overconfidence. In the years before the Wall Street crash of 1929, people borrowed money just to buy stocks. They believed prices would never fall. But underneath that confidence, there were cracks, too much debt, weak financial systems, hidden risks. The same pattern appears before wars. Tensions rise slowly. Conflicts build quietly, and most people don't notice until it's too late. If World War III were to happen, it wouldn't begin in a stable world, it would begin in a fragile one. And when pressure builds for too long, it eventually breaks. When a global war begins, markets don't wait. They react instantly. Investors panic, money moves quickly, and uncertainty spreads everywhere. Stocks fall fast. Just like in 1929, fear takes over logic. But today, things move even faster because markets are now digital. Trades happen in milliseconds, and information spreads instantly. That means a crash today could happen in hours, not days. During this time, governments may step in. Trading could be paused. Banks could limit withdrawals. Emergency measures could be introduced. This is no longer a normal economy. This is an economy in survival mode. Here's what most people misunderstand. A stock market crash is just the beginning. In 1929, the crash didn't stay on Wall Street. It spread into everyday life and triggered the Great Depression. People lost money, so they stopped spending. Businesses lost revenue, so they cut jobs. Banks became unstable, so they stopped lending. And slowly, the entire economy froze. Now imagine that same chain reaction during a global war. Supply chains break, trade slows down, essential goods become harder to find, prices rise, uncertainty grows, and the economy becomes something people no longer trust. That's when fear moves from the market into everyday life. But something interesting happens during war. The economy doesn't just collapse, it transforms. During World War II, the United States completely changed how it produced goods. Factories that once made cars started producing tanks and aircraft. Consumer products became limited. The entire economy focused on one goal: survival and victory. Now imagine that happening today. Instead of just tanks and planes, we would see cybersecurity expansion, artificial intelligence development, advanced defense technology. Some industries would disappear, while others would grow faster than ever before. This is where the biggest shifts happen, because in times of crisis, money doesn't disappear, it moves. Every crisis creates winners and losers. During war, certain sectors grow rapidly: defense companies, energy producers, technology firms. At the same time, others struggle. Tourism declines, luxury spending drops, global retail slows down. This pattern has repeated across history, including after World War II. Understanding this shift is important because it shows something most people miss. Even in crisis, opportunity exists, but only for those who understand where things are going. When the war ends, the damage doesn't disappear, it changes form. The biggest challenge becomes economic pressure, massive government debt, rising inflation, increased cost of living. Food becomes more expensive, fuel prices rise, daily life becomes harder. Even if people are working, they feel the pressure. We've seen similar patterns before, but never at this scale. And this is where recovery begins, slowly. After World War II, the U.S. became the world's leading economic power. But after World War III, that outcome is not guaranteed. There are different possibilities. The U.S. could remain dominant, or new powers could rise. Global systems could shift, the role of the dollar could change, and the way the world trades and invests could look completely different. History shows us one thing clearly. After major wars, the world resets. After the Great Depression, people didn't just lose money, they changed how they thought. They became more cautious, they saved more, they avoided risk. After a global war, this mindset would return, but even stronger. And that changes the entire economy, because economies are not just numbers, they are driven by people. From the Wall Street crash of 1929 to the Great Depression to World War II, history sends a clear message. Crisis doesn't just destroy economies, it transforms them. World War III would not be the end of the U.S. economy, but it would be the beginning of something completely different. The only question is, will you understand that change before it happens? If you want to stay ahead in uncertain times, subscribe now. Because in a changing world, understanding money is no longer optional, it's essential.